welcome back. You're watching Power Breakfast on cnbc TV 18. But in a proud moment for all Indians, the Indian origin economist Abhijit Banerjee is among the 3 professors to win the Nobel Prize for Economics this year. Banerjee is a professor at Massachusetts Institute of Technology. He, along with his fellow MIT professor Esther Duflo and Harvard professor Michael Kremer, have been awarded the Nobel for their experimental approach to alleviating global poverty. In an interview to cnbc TV 18 after the prize was announced, Banerjee spoke about government policies, what works, what doesn't, and the current concerns of the economy. Here are some snippets of that conversation.
You should make policies which work and not policies that you imagine to work. And I think there is always a little bit of a willingness in India to announce policies because they sound good or, they have a political purpose. And the general message is you should do pilots, carefully evaluate them, understand whether the policy works or not, and take it from there. So that's a very, very simple message, but it's one that probably has a fair amount of bite even now. I think it's not that the policies are evaluated based on, accepted criteria and looked at as options. There's Pradhan Mantri says it happens. That's in a sense that style of thinking is partly what we are resisting. It's a very serious concern. Partly, just I think the general trickle down is going to slow down. Partly, I think, and maybe more importantly, one of the key channels of transmission of a kind of income from the urban growth centers to the rural, places where income isn't directly growing so much, is comes to real estate, and real estate is right now in a crisis. And so once construction goes down and brick kilns go down, the transmission of urban growth to rural areas just stops. The farmer income transfer, I think, is a good idea. I think the net incomes of the farmers are not doing very well, and it's not a huge transfer, and it's been compensated. I mean, it's sort of been cancelled out by the fact that the terms of trade have moved against agriculture quite severely. I think it's a sensible idea to move away from support prices and go towards giving cash to the farmers. But I think it has to be more cash.
All right, so that was India's Nobel Laureate for Economics, Abhijit Banerjee. We have Finance Minister Nirmala Sitharaman as well yesterday met the heads of the public sector banks to take stock of the credit outreach program. The first phase of the program was to help enhance credit dispersal to retail customers and small and medium enterprises. The government said that 10,900 crore rupees was disbursed in the first 9 days of October through loan camps set up by banks. In total, 81,700 crore rupees have been disbursed, and out of this amount, the government claimed that more than 34,000 crore rupees have gone to new entrepreneurs. Addressing a press conference with top bureaucrats at the Finance Ministry, the Finance Minister said that large corporations owe 40,000 crore rupees to small and medium enterprises.
The Corporate Affairs Ministry has a complete list of companies which have stated that they owe MSMEs only, nearly 40,000 crores. That is disclosed by these companies in the MCA website itself. What we've requested banks to, both Secretary Corporate Affairs and Secretary Banking will ensure that the data in all disaggregated form is given to these banks.
Outreach program was conducted before the Durga Puja, and in those camps from 1st to 9th October, an amount of rupees 81,781 was disbursed in the camps and in the branches.
In those 9 days?
In those 9 days, and of which new term loan was 34,342 crores.
Okay, so that was about the PSU banks, ended largely lower yesterday, but the stock that will be in focus today would be Hindustan Unilever. Now that one reported a slight beat when it comes to the numbers yesterday. The domestic volume growth came in better than expectations and the numbers also slightly better, but it was the management commentary that was a tad bit cautious. Mangla will tell us more about this. Mangla, what are the brokerages saying and what do you make of the numbers as well as management commentary?
Well, what I make of the numbers, Anisha, they're fair, but given the environment, they're lovely. That's all I'd say. The positives of the number, revenue growth of 6.7% above what the street was working with. Domestic volume growth coming in at 5%. Again, tad above what the street was working with. All of this did not come at the cost of margins. In fact, EBITDA margins were much higher than what the street was working with, 24.8%. We were working with a number of 23.7%. And all of this is gross margin led. So 250 basis points improvement that has come by in the gross margins year on year. And the company, did they hold back on ad spends? No, they spent 8% higher on ads, which means that ad spends as a percentage of sales have been higher by 20 basis points. So the up move that we're seeing in the margins are primarily on account of lower input costs and also the premiumization trend that the management did allude to, and that's a positive. Over and above all of that, the effective tax rate is at 20% versus 30%. So the finance minister announcing the tax cut has helped boost their net profit. Now on to what's not good. The management says near-term demand is challenging. Rural growth at 0.5 times of urban growth. Yesterday we were talking about 0.8, 0.9 times. It turns out to be, it is half of what urban growth is at. So this is something we'll definitely have to watch out for going forward. Also, margin headroom is very limited because now the company will look at passing on the raw material prices to the customers. Like they said yesterday as well, Peers and Dove, they will look at price cuts. And finally, prohibitive valuations. Even after, the sort of performance that it's showing, the stock is very close to a record high, trading at 50 times FY21 earnings. But is the road ahead good? Yes, it is, because despite weakness in rural, they're showing 5% volume growth. So any slight rural recovery comes by and growth will be catapulted. And the analysts, there's yet to bake in estimates of GSK Consumers merger. So that could provide a further boost to the company's EPS and, contain the stock at elevated levels. We have brokerages. CLSA has raised their target price from 21.35 to 22.50. They say the GSK merger could add at least 6% to their EPS estimates. That's number one. Macquarie says that they have raised their target as well. And the reason why they've raised their EPS by 4 to 6% is on account of lower tax. So you have two triggers coming in, 6% EPS coming in from GSK Consumer merger and 4 to 6% rise in EPS on account of lower tax outgo. And JP Morgan finally says premium multiples could hold given better performance versus most peers. So results are fair in current environment, look definitely lovely. Management commentary is conservative, but that's how HUL has been. Valuations are prohibitive with a few triggers going ahead. But let's also listen to what the management had to say while they were addressing the press yesterday.
Looking ahead, we expect the near-term demand outlook continues to be challenging, and we expect it to remain so for some time. The policy initiatives taken by the government augur well. Income transference to the rural areas, however, will be a key imperative. Commodities and currency will continue to be volatile. So our strategic agenda continues to be one of delivering consistent, competitive, profitable and responsible growth. We continue to progress our purpose-led and future-fit agenda, which is underpinned by our sustainability initiatives and reimagining HUL driven by leveraging data and technology in all aspects of our operations.
Okay, it's time now for a quick break on the show. Up next, we'll get you what to expect from Wipro this time.